once again, this is Mark Espy with MarketTamer.com, and I need to remind everybody that all that we speak about this evening is for educational purposes only, never to be construed as a recommendation to buy or sell anything. Please do your own due diligence. Again, a holiday shortened week. We began the week with, it's kind of a strange looking candle, but it's a dark candle. All that indicates is it gapped up and traded down. So in perspective of the trading range for the day, it closed lower than where it began, yet the close was higher than the close of the prior Friday. Then we followed it up with a Marabuzu type candle, no wick to the upside or the downside, and a very, very big up day, and then followed on Thursday by a high wave doji showing great indecision, and then closing out the week with a narrower range channel and beginning to subside, I think, in the up move. Lack of participation market-wide in terms of pushing the market and continuing to push the market up, in my estimation. The spike low here resides at 2,062, which coincidentally also coincides with a Fibonacci level. That's a 50% retracement level at that level. We ran into this gap right here. Gaps should always be respected, no matter how large, and that can act as resistance, and it may in fact continue to act as resistance at this level. We have this double bottom that resides right here, and that is at 2100 to about 2150, and that's from the 25th of May, the first bottom, and the 8th of June. We also have this swing load that occurred back here on February 5th, and that is right at about 2100. This shelf that is up here, this is going to also act as resistance, and that's at 2325. And then we have the swing high here at just above that, at about 2341, I believe is where that is. Then we have a swing high here at 2425, just above that, and then the April 26th high, and that happens to be at about 2535. So my best feel on this, very consistent with the analysis of the other charts, is that I feel that we're going to run out of gas here and begin to languish, go sideways, come back down, and retest the lows here. Interesting to note that the 50 simple moving average did not cross over the 200 simple moving average as it has on the other indexes. If in fact we break below this 2062 level right here, then the next area that I would look at would be 1900. And there's some gaps from mid-2008 and late 2009 that we need to respect that could pose support at that level. The stochastics did cross over and looks very bullish for the time being, and it looks like we're going to cross over here, the MACD over the signal line, and we happen to be right at the zero line right now. It looks like we may begin to just print some bars on the positive side of the zero line for the histogram, but not quite yet. So again, overall analysis or summary of all three charts is I feel that the up move, it does not have a lot of conviction in terms of volume, in terms of market participation in pushing it up. We are at some levels that could pose resistance currently. It could either languish and or begin to come back down, and that's my supposition, is I believe it's going to come back down and begin to retest some of these levels down here. Okay, with that, I look forward to talking to you next week, and I would wish you just a great trading week. I would suggest that you remain hedged. It's a volatile market. It's a little bit crazy out there, and make sure that you remain diversified and be careful out there. It's certainly a lot of money can be made out there, but a lot of money can be lost as well. So be prudent. Look forward to talking to you next week.